Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing out there? Welcome to the Speakeasy. This week we'll be doing the FinTips videos from the Speakeasy because it's cool, right? This is where we do our wine and wealth classes for clients every Thursday night. And just thought I'd bring you into it a little bit, show you a different side of the studio. We're financial advisors that instead of buying some sort of fancy office or whatever, we built a TV studio. We thought we'd just use every opportunity to share with you and our clients how to keep your dough straight, man. That's just what it's all about these days. So today I want to talk about the stock market being extended, and things could change, of course, as when you see this, but the stock market finds itself extended. Actually, in our Notes from Jazz email, it's an email I send out every week to clients. Here's what they look like. You can click on them and kind of see what's going on. I kind of went over how the markets are moving. Real simple. It looks like a lot, but I try to go over real simple how things move, and you know, clients can actually go through and look at old ones here and kind of see the things that we talk about. But I talked about the markets being extended, and I want to add on that a little bit here for you today. Now, the market currently finds itself, and I'm going to talk about the S&P today. I'm talking total returns. I'm not talking about the ETFs or anything like that. We're looking at the SPX, which is the direct index there. Finds itself 2.5 standard deviations away from the 50-period moving average. Don't leave. If that scares you, I'm not trying to scare you or sound intelligent, because Lord knows I'm far from it, but what we're talking about here is a level of being overbought that we rarely see. It's a technical indicator that traders like to look at. I'll share with you here real quick. If you want to do this on your charts, just go over to any charting platform that you have. We're going to type in the SPX, however you find that symbol. And you could use the what's known as the Bollinger Bands or Bollinger Bands if you want to look at those. And what you would do basically is just say, hey, I want to change the setting. Let me see if I can do this real quick. This was not supposed to be part of this video here. But you could just say, okay, 50-day moving average, and I want to see when it is 2.5 standard deviations away. So if I click on OK here, you can see that we find ourselves closed at 2 standard deviations. The last time that happened was 2017. You can see it's very, very rare to see that. And in fact, it's actually only happened 17 other times since 1945. So it's a really rare event that happens, but a lot of people think that the market's, going to fall from there or something. And so we thought, hey, let's share the data with you, because what it means is the markets don't have to pull back. They can pause, and oftentimes they do. So what I want to do is share that data with you here so you can see, because there's some really interesting things we can get from this. When the S&P finds itself 2.5 standard deviations away from the 50-period moving average, here is the average performance going over the next week, the next month, and 3 months. You could take it out further. I didn't have any room to put the rest of it on here. But here's what we have. The average performance is a slight decline. It's really not that bad, right? The median performance, a slight decline. Right? Then what I did is I said every other 1 week period that does not include when the S&P is 2.5 standard deviations overbought, what did the markets do? So every other period out of just those 17 weeks, since 1945, the stock market averages a weekly gain of 0.3%. So what we can see right away is over the next week, the stock market tends to underperform what it normally does, right? So the light green there is what it normally does. Over here is when it's extended. So over the next 1 week, slight decline. If we get it, okay, no big deal. However, a lot of people think, oh, it's overbought, it's going to sell off. It may, but it really means that it just tends to underperform. The average gain over the next 1 month is only 0.21%, which is well below all other times where the market averages a 1.01% gain over a 1 month period that does not include those it's 19 in total. We got 2017 and now. It does not include the other times. So this is basically all other months, looking all the way back to 1945. So we've got underperformance, not a pullback. We don't average a decline. So long-term investors go, all right, the next month may be a little uneventful, but I'm not worried about it. Big deal. I'm a long-term investor. Short-term traders go, maybe there's a little something here. Go play extended stocks. Find something that's way overbought, maybe even further than 2.5 standard deviations. And let's see if we can get a pullback there. And looking over the next 3 months, it's certainly something you don't want to miss on. If you're a long-term investor, you may see a little volatility over the 1 week, 1 month time period, but over the next 3 months, all seems to just behave as normal. However, slightly below average with what normal is. So the normal 3 month window, just go 3 months, 3 months, 3 months, 3 months, all the way back to 1945, 2.39% is the average gain in the stock market, the S&P, over a 3 month period. We tend to average a 1.87% gain when the stock market is overbought, again, like it is now, 2.5 standard deviations easily away from the 50-day moving average. So I use this to illustrate that we could pull back, we may not, but we're likely going to underperform one way or the other. If we continue higher, it's likely not going to be, a rocket ship. If we happen to pause for a little bit, that'd be totally normal. If we pull back a touch this week, going into next week or something, that would be perfectly normal as well. Ultra short-term traders know you've got some opportunity for some back and forth. Long-term investors, you go, all right, we're overbought. It's been a fun ride, but if we pull back, I could live with it. It's not a big deal there. So it's a different way, right? This is a FinTip series that we do. It's a little bit different type of FinTip. So let me know, what do you think about the stats side of maybe giving you some FinTips there? Sometimes we talk retirement investing. Sometimes we talk the stock market. I hope you liked it either way, and I'll wish you a good rest of your day. Come back 5 o'clock live, YouTube channel, Jazz Wealth Managers. We do the closing beat. We go over the stock market, what happened throughout the day, and lots of cool stats and things like that as well. So I hope you'll join us. Have a great rest of your day, and thank you so much for watching.